All right, ready? All right,
Ready when you are.
all right. Hi, and welcome to the first episode of Slot Leader. I'm your host, Umed Saidov. For those of you who don't know me, I am a finance professional with more than a decade of experience. I'm a Cardano stake pool operator. I operate Skylight Pool, tickers Sky and Sky2, and I'm somebody who's followed this project closely since 2017. Some of you might know me as a person who writes articles about rewards. I've researched this particular topic extensively and have written numerous articles which you can find on Reddit. Slot Leader was created in order to bridge the gap between the traditional world of finance and the new world of digital assets and cryptocurrencies. I think there's a lot of misconceptions about this space in the traditional finance world. So if you are a financial professional or a business professional looking at the space for its potential, you might find something useful in our episodes. Conversely, if you are a Cardano enthusiast who would like to venture out of the technicalities of A0 or K factor or saturation and try to see a bigger picture, this podcast could also be for you. So each episode of Slot Leader has 3 segments. In the first segment, which covers the news, I take a look at the events that have happened in the blockchain industry as a whole and in Cardano community in particular and try to see their economic significance. In the second segment, which covers the markets, I analyze the market data in terms of prices and volumes and try to see if there are any underlying insights for traders. The purpose of the third segment is to go and do a deep dive analysis. Each week we take a particular topic that we want to analyze in detail, and we might invite a guest or two to discuss a particular point that might be of interest to our viewers and the listeners alike. Now, I would like to tell you a little bit about our guest today. For the first episode of Slot Leader, I thought it would be only appropriate to invite Charles Hoskinson to introduce Cardano to the wider audience of finance and business professionals. Now, for those of you who do not know, Charles Hoskinson is the CEO of IOG, which is a blockchain engineering company that created Cardano. Our interview today is filled with a lot of wisdom and interesting insights, and I hope you enjoy it. I would like to tell our viewers and listeners alike that the contents of this podcast are only for educational purposes, including the analysis that we do. I'm not a financial advisor, and nothing that we say in this program constitutes financial, legal, or tax advice. On to the news segment. I have to say there's never a dull day in cryptosphere, but this week there's at least 2 things that I would like to cover in detail in this segment, and the first one is the Catalyst project. Cardano launched the Catalyst Fund, public fund, for the first time in the history of the project on September 15th. They wrote a detailed article on their blog at iohk.io. You can read that and find out what the details are. But I will give you a couple of information that is critical for you to understand what it is and how it works. So the Catalyst project is a decentralized fund that has made $250,000 worth of ADA available for projects that will be ultimately built on Cardano. Now, it has significance for two perspectives. The first one is that it's the first time the decentralized treasury funds are being dispersed. The second one is that all those funds are going to be dispersed through a decentralized voting. So effectively, you have Voltaire here, happening right now. So this marks the beginning of Voltaire, as far as I can tell. Now, as far as the details go, we entered the exploratory sort of challenge, and that started on September 16th, and it will continue up until September 23rd. let me actually share a screen with you where you can see all this stuff. So yes, so here, in the exploratory challenge, we basically take a look at what kind of projects could make sense for this round of funding. And then the next stage is going to be a stage where we actually submit ideas, and that's going to start, I think, on the 23rd. Yeah. And that's where, if you have some idea that you think is worth, getting funds for and building, you write it up. There is a form for that, and submit it. And there's a stage of refining ideas, and then there's the stage of finalizing proposals, and then, the final stage is the review, proposal reviews. And people will vote on each and every project that gets to that stage, and whoever wins the money goes off and starts building. So I will put the relevant links to on the comments section of this video, so you could go directly to the web pages that are necessary in order to learn about this project. But this is the gist of it. It's a fascinating new phase for Cardano, and it's I can't wait what it will bring for the community. I think it starts the phase where we will start seeing some ecosystem developments. Now, the second thing that I would like to mention is the fact that Kraken got a banking license. I mean, it is a very interesting and very significant news for the entire ecosystem, because the banking side of cryptocurrency, it has always been challenging for various reasons that we don't know about, legal side or whatnot. Having a bank account, if you are involved in cryptocurrency, has always been difficult. Now, the fact that Kraken, as an exchange, the cryptocurrency exchange, has gotten a banking license in the state of Wyoming, clears a lot of hurdles for people. In their website, in the blog post, they describe what kind of entity it is, and it's not a fully fledged bank. Oh, I mean, it is a fully fledged bank. It's just that the entity itself is called Special Purpose Depository Institution, if I can read it correctly. Yeah, and it's an institution that has to keep the 100% of the reserves, which means that for every dollar that you deposit, they have to have that dollar in their vaults, pretty much. And maybe it actually means that they cannot make loans as a result. I mean, they're not subject to the fractional banking in that respect. But regardless, I mean, the fact that we, the community in the blockchain community actually has a way of actually opening a bank account directly with an institution, depositing their cash, withdrawing their cash without a problem, and those deposits would be, insured up to $250,000. Is a big step forward. So I am very happy that this has happened, and I think it creates a lot of good precedents for the space as a whole. Currently, though, only the U.S. citizens are being served, and I think Kraken has plans to start serving everybody else internationally too. So in terms of market data and market pricing for ADA, the past week has been an interesting one, because we went from at the beginning, from 9.3 cents to 9.7 cents at the highest, and then we started coming down on September 16th. We hit 9 cents, and it just hovered around 9.1 cent. At the lowest, I think the price went down to 8.9 cent. Volume has been kind of average in this respect. It's hasn't been too high, except for these two candles, the green candles, that mark the buying in terms of volume. But if we look at the technicals, the 1 week technicals are either neutral or buy. I mean, the exponential moving averages, a couple of them are showing sell here, and the simple moving average is showing sell. For instance, in exponential moving average, 10 days showing sell, but it's a mixed bag here, so you can't just make a prediction based on these. But I've heard the chatter on Twitter that ADA is consolidating around 9 cents. I don't know what you guys think. I think, it's early days. I don't think the market has yet taken into consideration the potential of this project or the potential of Catalyst. In fact, if you look at the price, when Catalyst was announced, it looks like it barely made a dent even. So I'm not sure if these markets are even efficient in the way that they're efficient in financial markets. So, take it with a grain of salt right here. I would like to delve into this and try to find out what is driving the price here. And we will have a more sophisticated tooling in order to make those kind of decisions, because we will have the models available to us from the IOHK. And those will be the interesting discussions, because we will overlay the data that we get on top of what pricing and volume data that we collect and see on the markets to make actually some interesting observations. So I'm kind of looking forward to that. The guys, the quant that works in IOG, I'm being told that he has very sophisticated models. So I'm trying to get him on the program and go over these interesting, juicy details for you guys. Maybe next week, maybe the week after that, we will have him on, and we will have a really interesting pricing discussion. But for today, this is it. I don't see anything interesting going on. Maybe hopefully next week we will have some interesting price action to discuss. Hello, everybody. I have Charles Hoskinson here today with us. He's a known figure in the crypto market, and he's the co-founder of Ethereum and the founder of IOG, which has created Cardano. Charles, you are again a known figure in the blockchain space. But for those viewers who do not did not have the pleasure of meeting you, could you please say a few words about yourself?
Sure. I've been an entrepreneur in this space for about 8 years now, and started a few companies. Ethereum was definitely one, the Ethereum Limited Company, and that turned into the Ethereum Foundation, which obviously is a pretty big project in this space. And I also created Invictus Innovations with Dan Larimer, and that was the BitShares project. And he later on went on to go to do EOS and Steemit. And then the company I have spent most of my professional career in the space at is Input Output Global, which originally was known IOHK, Input Output Hong Kong. And it's a company with about 250 people, and we do a lot of science and engineering work, but we're principally focused on economic identity. So we think a lot about how do you get economic identity to those who don't have it. So how do you get the ability to move money around the world, get credit, get insurance, get banking services, have a stable reputation metric that doesn't change if your government collapses, these types of things, like credit scores or things like that. And it turns out that I think there's enough meat there on that problem for me to spend the rest of my life working on it. And we've had some great fun and a lot of progress along the way. What makes us unique in this part of my career is that we focus a lot on first principles thinking. So almost everything we do, there's a scientific paper behind it or a lot of original thought behind it. And at times it slows us down a little bit, but on the other hand, it allows us to come up with really novel new solutions to things. Like, for example, Cardano, which has really disrupted the whole conversation of proof of stake, and soon we'll do the exact same thing with smart contracts. And yesterday, really got going on Voltaire, and we have lots of people on Idea Scale now, so we're hoping for a governance revolution as well. So it's fun to be me. I get to be a scientist some days, an engineer other days, and get to go and try to change the world on the weekends.
It's definitely a very exciting space, blockchain. I remember my first exposure to it, and I thought, as a somebody from banking, I thought, this is just funny money. It just doesn't make sense. I shouldn't
Yeah.
even look at it. But blockchain itself is fascinating, and open blockchain is a fascinating facet of this whole space. Can you tell me what exactly attracted you to this blockchain space? I mean, you're a mathematician, you had your career, and you were teaching, as far as I remember. So what was the catalyst?
Yeah, I was originally going to be a professor, and I was kind of pursuing that path slowly and systematically. And you have to do a lot and endure a lot of pain to become a proper professional mathematician and live off of very little money. So you become quite acquainted with ramen and mac and cheese and the other things. That said, at the same time, I was developing a love and a passion for Austrian economics and for just what makes good money. Because we all kind of grow up and we look at money as something special and divine. It's almost like a Bible or something, and you say, "Oh, this is some sort of special thing." But then when you start deconstructing it, you realize that it's just a piece of paper that we have collectively agreed to be worth something. You say, "Okay, well, why is my money worth more than, let's say, Zimbabwe's money or Venezuela's money?" And then when you start asking that question, you start flirting with some very uncomfortable truths about how geopolitics work and how banking works and so forth. So I joined the Ron Paul campaign back in 2007, and there it kind of crystallized a lot of these thoughts, and I became for a time a gold bug. And because I guess that's what happens when you start deconstructing monies. You go back to first principles and you start with commodity monies, and then you kind of work your way to gold-backed monies, and you say, "Oh, okay." And then over time, you kind of understand what credit is and fiat is and so forth. So right around the same time, a few years later, the Bitcoin revolution started, and suddenly it married kind of two passions. I loved numbers and math and computer science and cryptography. These were things that were always in the back of my mind, but I was also doing money stuff, and they were kind of merged together. And I said, "Wow, that's really cool. It'll never work, but it's really cool." And because it was one of those chicken and the egg type of ecosystems where you say, well, for it to work, a lot of people have to take it seriously, but people only take it seriously if it works, right? So
Yeah.
how do you get that critical mass? So I was a speculator. I bought a lot of Bitcoin, and I was a miner. I had a Crossfire set up with a bunch of AMD 5850s, and I was on Slush's pool, 1.2 gigahashes of mining power, which was quite a lot back in those days. And I made a lot of Bitcoin, but I didn't take the space too seriously. And then right around 2013, I noticed an inflection point. It was after the Cypriot crisis, where the government said, "Okay, it's all right for us to just start taking money out of other people's bank accounts to pay things." So, whoa, that's probably going to happen here if we're not so careful. And lo and behold, Bitcoin went from $4 to 260, I think 262, $263 at the all-time high there. And it was just a crazy surge. And so at that point, I said, this is probably going to be a big thing. I need to get on the ship. And if I don't get on the ship, it's going to sail right by me. So I said, all right. So I didn't know anybody, didn't know what to do in the space. So, I called an old friend of mine who was a professor, and I said, what should I do? And his advice to me was, those who cannot do, teach. And I said, oh, that's a good idea. I can teach. So I created a bunch of free courses and content on YouTube and Udemy for Bitcoin. I ended up getting 70,000 plus students and thousands of emails. And I met everybody, Andreas Antonopoulos and Roger Ver and Eric Voorhees, because they weren't so big at that time. You could actually just email them and talk to them, and they'd talk to you. And through that process, it's what turned me basically into an entrepreneur. And I had to learn how to run a business and incorporate and make payroll and do all these things. So it's been a pretty wild journey over the last 8 years being in the space. But it took a few years before coming to the space to kind of realize the use and utility of it. And once you get to a certain inflection point, you start just thinking, this is common sense. We're either going to have a one world currency, or we're going to have private monies that compete with national currencies, but it makes no sense for one country to be the world reserve currency. And then you start thinking about how global settlement clearing works, and wow, it takes 5 days for a wire transfer, and you have remittances that are 15%, but I can send an email and money is already digital. So why the hell does this cost so much? This is madness. And then you start thinking about finance in general, and you say, well, hang on, the way we're doing banking, the way we're doing credit, the way we do credit scores, all this stuff is really bad. We need to improve it. And so this is just an open invitation for the whole world to start innovating and turn it into kind of a Darwinian marketplace where you have thousands of competing ideas. They fight each other, and eventually the survival of the fittest, those ones will come to the top, and we can rebuild the world financial system. It's just so exciting to be part of it.
That is it's a very interesting and accurate depiction of what's going on in the blockchain space, and I completely share your sentiment here. I think, for me, the point of realization was that, when we write a check, for instance, right, it's a message to the bank with your signature, which is easily faked, to disperse funds, right? And it's very unsecure if you basically take it, right? If somebody has your checkbook and seen your signature, I mean, at this point you could probably fake it very easily with
but remember, checks were an artifact of a time when we had multi-factor authentication through physical contact. So your banker, your cashier, all these people. So if grandma writes a check for the grocery store, the cashier knows who grandma is. So if some 22-year-old kid comes in with tattoos all over his face claiming he's Margie, you're like, wait a minute here, this is crazy. You're not Margie. I know her. She has cats.
Well, I can tell you another thing that I've tried it actually, and it worked. Remember how you swipe the credit card and you had to sign? And a couple of times I said, I'm just going to sign like really weird, some signature, right? And it passed.
I do that all the time. I write Bob Dole. Nobody ever called me on it.
I know. I mean, this is there just to deter people, but actually whoever has your card has your kind of like spending capability. Unless you live in New Jersey and the guy who's trying to use your card is somewhere in Oman. I got that call. But anyway, there are insurance products to actually take care of these situations. But again, it's a matter of cost here. But what I want to do, I want to go to the next question, Charles. For those people who do not know Cardano, can you tell us what is Cardano in a very short sort of way?
Yeah, so we tend to look at Cardano as a financial operating system, and the intent of it is to give economic identity to those who don't have it. So to understand that, you have to ask, well, what is a financial operating system? And my view of that is it's some form of collection of protocols and software and hardware that allows you to represent value, identity, and governance all in one setting. So basically, you can use this to issue stocks and bonds and commodities and currencies and utility tokens. You can use this to identify your people and do KYC and AML in your people, or build reputation metrics and so forth. And you can use this to actually decide who pays and who's in control. And because anything in finance requires a regulatory layer or a decision layer or governance layer. And if you go from a national to a transnational view, and you go from public to private, you need to replace the pre-existing governance structures with something else. It's kind of a roll-up of a lot of the concepts and ideas that have come out of the peer-to-peer foundation, and ideas that have come out of the cryptocurrency space, and ideas that have been floating around the crypto anarchy world since the 1980s. And we said, let's just go for gold. Let's put a collection of protocols all into one stack, and then call it a financial operating system, and then say, well, what can you build then on something like that? And that's usually how you understand these things. Like people say, oh, I have a smartphone. It's like, well, what does that really mean? You say, well, let me show you Google Maps. You say, oh, okay. Now I kind of get an idea of what a smartphone does. And the more apps you see, the more clarity you get about what this concept is, a smartphone. Similarly, you say, what's a FOSS? You say, well, the more utilities that you see it runs, the more ideas you get. So for example, we're looking at things like supply chain systems, so we can track and trace agricultural goods. We're looking at voting systems. We're looking at credential management systems. Like the country of Georgia, we have a deal we've done where 50,000 students a year are going to be onboarded into Prism, which is a component of Cardano stack. So you can authenticate if they have college degrees or not. And we're also looking at financial applications as well. Like there's a whole bunch of DeFi things that are going to come, like stable coins and oracles and DEXs and the usual suspects that we see from the Ethereum space. But the general idea is that the system should be able to be an end-to-end stack for economic identity. So what that means is that if some person in Senegal or some person in Rwanda or wherever enters the system, they should be able to have some place to place their data and their identity to build a reputation. They should have some way of getting credit. They should have some way of interfacing with a currency that's reasonably stable that they can send to anybody in the world. They should have the ability to interface with exchanges. If they have a business, they should have the ability to securitize that business. So they have banking services, insurance services, credit services, remittance services, but then it also includes a governance stack. So if they, for example, want to do shareholder votes with a governance layer, well, they can reuse the Voltaire system, right? And then suddenly now they can do shareholder votes with the system. This is kind of the vision of it, is that it's a one-stop shop. And then once you're in it, you don't have to leave it. And it will do more and more and more and more of your financial life and your economic life. And it gives you identity that a government can't take from you, identity that's not revocable, identity that you can't lose. There's ways to recover and restore that. So that's kind of that pie in the sky dream. But to get there, you need some really serious heavy duty protocols and user experience and science. And that's what we've been working on for the last 5 years. We've written more than 75 papers, 1 million lines of code, and we've launched now 2 generations of the product, Byron and Shelley. And every time we launch a generation, it gets more capabilities and features. And we're just entering the Voltaire era and soon the Gauguin era. So we'll get smart contracts and voting. And then basically the system self-evolves so that it can capture more and more and more of that economic life and also get more and more users. The other hallmark of Cardano is that we designed it so that the system will scale with the needs of its users. So one day we wake up and let's say we're fortunate enough to have 1 billion people in the system can actually sustain and handle that, whereas current cryptocurrencies can't do that. So, it's succinctly, what is Cardano? It's basically a framework to give people economic identity. We termed that a FOSS, a financial operating system, and under the hood, it has to have a bunch of protocols for value, identity, and governance, and then it's self-evolving. So those protocols get more sophisticated. They cover more and more of the financial markets and the general governance markets. They become lower cost to use and more accessible for larger groups of people.
Oh, that's fascinating. And I know that IOG was one of the first, if not the first, cryptocurrency that said, let's go back to the basics and use peer review research before we actually design and implement a blockchain. Now,
Right.
Can you tell us what you learned in the process and whether that knowledge will help IOG to refine and improve Cardano in the future?
Yeah, so this solves a acceptance. So you think about when you have a vendor-vendee relationship and you have things like acceptance criteria. Well, how do you actually verify if it's good or bad? So let's say a journalist is looking at a system or a third party is looking at a system, and Bob says, I have the best proof of stake protocol. It has all these features, and they give you some paper and it's got a lot of math in it. And most people can't read those papers. It's like someone gives me a paper on quantum chromodynamics. I'd be like, okay, this is a pretty paper. I like the font. It's like moon math to me. I can't understand these papers. It's not my domain of expertise. So you need some independent third party group that comes in and says, we've read the claims and we think there's merit to them to the extent that they're probably right, or at the very least, they're in the right direction. And this is novel to the scientific community as a whole. So peer review doesn't tell you if it's completely correct or completely right, but rather it tells you trusted third parties who have no skin in the game, who are objective, have reviewed the entire setup and said, hey, there's something here, and we think that it looks right. And then it starts the discussion. So this is something that's been used for 400 years in the academic community successfully, and it's why we have the planes and the trains and the rocket ships and modern medicine and so forth. So we said that's probably a pretty good system for the scientific basis that we build a financial operating system on. Okay, but the problem is that it's very, very intensive. So you have to hire scientists, proper scientists. You have to write proper papers, and then you have to submit them to proper conferences. Normally there's journals for peer review, but in the computer science world, it's inverted. Conferences are the primary peer review mechanism. So you submit to conferences. A lot of the ones we submit to accept only 10 to 20% of the papers that are submitted. It's a double-blind submission. So the author names are removed from the paper, and they are sent in. So they're anonymized, and basically people look at it and they don't know who the authors are. But we don't know who the reviewers are. There's a review committee. So we know they're sampled from some committee, and you can kind of tell because it's a small enough community, but you don't know exactly who's there. And then they basically have a scale from strong reject to strong accept, with everything in between. Weak reject, reject, weak accept, strong accept, something like that. Depends on the conference. And there's a back and forth process. So they'll say, okay, we may accept the paper, but we have a lot of questions, or we just outright think it's garbage, or this is the best thing we've ever read. You're on the road to your Turing Award. So that's your range of feedback that you get. Usually it's quite hostile, because these people are paid to be professional cynics and critics, and very nitpicky. Cryptographers are extremely precise and vicious in their attempts to break things, and rightfully so. I mean, that's the mindset you want to have when your job is to all day long think about what can an adversary do to me. You get to be the adversary and attack things. So it's quite a process, and you get a lot of rejection along the way. And we've certainly had papers rejected, but an overwhelmingly large amount of our papers have actually been accepted to conferences, which is rare. It's because they're written by very good academics who know that game well. So then once your paper is accepted, you usually, in pre-COVID days, go to the conference and present. And the people in the audience aren't everyday people. They're people with PhDs, from Harvard and all these other places. It's very intimidating. And they just sit there and they stare at you, that all these people scored better than you on the SAT. They're a really bright crowd. And after they hear your entire presentation, then the Q&A begins. They start asking questions and talking to you. And then here's what they do. They almost always will go back to their labs and talk to their graduate students and say, those guys are dummies. We can write a better paper than them. And they do. And they write a better paper, and they kick you in the teeth in the introduction and the related protocols section, like we saw with Snow White, for example, and other papers that have come out in these days. And then, of course, we write papers and kick them in the teeth. But that's the process. And you have this beautiful learning process then. It's expensive in terms of effort and time, but what it does is it broadens your thoughts to the minds of hundreds, if not thousands of people. And you have people who are basically critical of you, who are actively looking for ways of breaking and destroying your protocol and your ideas, and finding ways to make that work for them. So if you're humble enough to go into this process and take the hits, when you come out the other side, whatever you've done is going to end up being significantly better than what you could have done as your own team. And you're going to go through this process as a cryptocurrency, whether you want to or not. The only difference is, are you going to do it with academics who are there for tenure and brownie points and reputation, or are you going to do it with anonymous hackers over the internet who are there for the money, stealing money from your customers? So this decision that you make, and I think it makes a lot more sense to do it with the academics, and you certainly learn a lot more in a very structured way. As a final point to that, a lot of the times when you're wrong, that's actually a good thing, because you learn a huge amount from that. And the people who find out that you're wrong, they get very obsessed with it, and they try to find a better way of doing things. A great example, it's in the physics world. I just read last night, there was a team at Harvard back in 2017 that was attempting to make metallic hydrogen. And metallic hydrogen is one of those like mystical super materials that if we could ever make it, it would like change everything, like graphene. And anyway, the only way you can really make it is you have to get a diamond anvil, and you have to take hydrogen and put it under so much pressure. It's like more pressure than what's in the core of the Earth. I mean, like, this is something that's made in stars. It's not made in, reality, in normal life. So anyway, this Harvard team tried to make it, and they claimed that they did, but then they said they lost the sample. And there's all these little issues with their approach and their paper. The most critical team for that Harvard team was this team in France. And they said, oh, here are all these things you've done wrong. And so the Harvard team's like, well, if you think you can do a better job, you do it yourself. And they said, sure, fine. So these French guys got together and they spent 3 years at their university, and they built a completely different diamond anvil and a different diamond tip. And it looks like they've actually made metallic hydrogen. If they have, it's a Nobel Prize of Physics for them. But that's the point of peer review, is that you tell the world what you've done, your methodology, how you think. They read it, they criticize you, they give you suggestions and advice. And then every now and then someone who's read it will go and just do something better. But the thing about our industry, the cryptography space, is almost all of this research is open source. So let's say Jim over at Stanford, figures something out. We can read the paper and be like, that's a good idea. And go implement it and say, yeah, that's better than our thing. And what does it mean for the Cardano ecosystem? We get all that value for free. We didn't even have to pay the guy, so that's a good world to be in. But you have to know the language. You have to know the secret handshake. You have to have the credentials. Technically, anybody can submit papers, and there's plenty of people without PhDs who have done that very successfully. In fact, the creators of Public Key Crypto, Diffie, he only has bachelor's degrees. So it's like you don't really need to be specially credentialed to be successful, but the people who generally are the ones who have domain expertise and training. So it's not easy, but it's necessary if your protocols are very complicated and you want to service the needs of billions of people.
Well, I can definitely say that I've read every single paper that Ouroboros, the team that created Ouroboros posted, and I can see the iterations and how each paper was trying to address the probably the weaknesses that these conferences probably identified. And prowess was probably something that was in the works when the first paper was released, because that's necessary in order for decentralized network to work. But I was very impressed with Kronos, to be honest, because it's just something that sources time internally and does not rely on any external input that could be compromised. Those kind of things that when I read were pretty impressive, in your line of work, and I can't wait to see them implemented in Cardano.
Yeah, actually, that was a really special paper, Kronos. Yeah, Leslie Lamport was one of the first guys to do major work in distributed systems, and he wrote this beautiful paper on clocks and time in a distributed system from like the 1960s or 1970s. It's one of the most cited papers of all time in the systems world. And Kronos was like unfinished business in that respect. And it's really fun to write papers like that. And it has real use. You can completely decouple a dependency on NTP in these types of things. There's a lot of theory there. And I'm glad and somewhat surprised that you've read through the papers. Most people haven't. They're very hard papers to fully grok. I mean, you can read the intro and the conclusion and kind of get an idea of what's going on. But the problem with the Ouroboros papers, and this is something that we've tried to start addressing, is there's a lot of mathematical nuance and complexity in them. And that is very hard for non-domain experts to work their way through. So we rewrote actually the Ouroboros classic paper.
I saw that. Yeah.
2016, and we rewrote it in 2019. And the new paper is significantly better. And I said, well, when are we going to rewrite the Proust paper and the Genesis paper? We need to kind of follow this model. And they're like, yeah, we'll get around to that. But one of these days, it's like in the invention of quantum mechanics. The first few guys who worked on that, it was just a mass soup, and it was a mess. And then guys like Feynman came around and created Feynman diagrams, and all this simplicity came into the field. And then suddenly undergraduates could study it, kind of grasp it, and do things with it. So I think that's the highest form of art in science, is simplicity. It's not necessarily getting rid of complexity, but
expressing
being able to explain things and express things with enough simplicity and brevity that even non-experts or non-domain experts can enter the field, read it, and get a rough idea of exactly what you've done and why it works, and be convinced that it's true. This is one of the reasons why I think, for example, gender studies and grievance studies are not really legitimate fields of study, because if you read their papers, they're incomprehensible. I mean, literally incomprehensible. It's like someone with schizophrenia is, what was it? Verbal diarrhea, confabulation. It's like they're just putting words on paper, and they're just like, I know what each of these words mean individually, but when you string them together into these strange sentences, I'm not sure what's going on. And then you ask, well, what are you actually trying to say? and then no one can actually give you a concise explanation. Meanwhile, when you actually look at all the major breakthroughs of science, like Newtonian mechanics, or all the really elegant mathematics that have come, or engineering that have come, it's always been, we found a simpler way to do it that is much easier on cost and time to build and understand by the general masses. And then people say, oh my God, that's so beautiful, give that person a Nobel Prize. So we strive for that as an organization, and we push very hard for that level of simplicity. We have yet to achieve it on the proof of stake side because it's a new field. But one of the agendas in the coming years, especially 21 and 22 and 23, will be to kind of synthesize all the knowledge that we have gained from working on Cardano in the last 5 years into one kind of monograph, or one canonical source, like maybe a new book on systems or something, and basically say this is the way on how to do systems in the cryptocurrency space. There's actually a book that did that for AI. This is probably one of the greatest books of AI ever written. It's by Peter Norvig and Stuart Russell, and I'm reviewing it for a class that I'm going to teach on computer science. And this book first came out in 1995. And before it, if you wanted to study AI, there were a lot of texts floating around, but they were not really strung together in a way that were super accessible, and they were more domain focused on whatever the professor cared about. What Peter did and Stuart did is they just put everything in one place, and they made it really simple and easy to understand. And now it's gone through 4 editions, and it's kind of like the Bible of AI. So if you really want to learn AI, that's the starting point. John Katz and Yehuda Liddell did the same thing for cryptography with Introduction to Cryptography, a Modern Approach. They put all this really complicated ideas, and they just put it all in one book, and they said, here's the thing for it. So I think that's the long-term goal especially for Ouroboros. The research agenda is to kind of synthesize a canonical manual and say, this is the thing, and it'll make it easy for people to get. But it's very expensive to do that. Simplicity is the most expensive thing in science.
Yeah, I can definitely agree with that too. I want to move on to the issue of safety with blockchain and cryptocurrencies in general, because there's for right or wrong reasons, the general public might perceive cryptocurrencies as being hackable, although that has never been the case with major cryptocurrencies. But you have chosen to write the entire blockchain, the Cardano in Haskell, and from my basic understanding, the choice for functional programming was to reduce, if not completely eliminate, the types of problems that cause the money to be lost, or the system to be untrustworthy for large transactions. Can you tell us if the results have met your expectations in that regard?
That's a great question. So people, programming languages are like religions in some respect. If you're a good Catholic, then everybody should be Catholic. So if you like C++, then everybody should program in C++. It's very crazy. So first, everything I say, I always put that as a disclaimer. So here's my problem. I have these deep scientific papers that are in math, not programming languages, okay? And somebody has to translate them from math to code. And there's going to be an impedance mismatch there. There's going to be a semantical issue where you go from math land and crazy protocols to actual code in production. There's a very good possibility you're going to make mistakes. Very good possibility you might actually implement the wrong protocol. A close protocol, but actually it's not the same as what the scientists wanted to do, especially when they start citing things like ideal functionality and so forth. And so early in the process, we said, well, we need to add an intermediate step where we carefully write down specifications and also kind of math, but math that is amenable to code. That's called a formal specification. There's a whole field of computer science that does nothing but think about that. You have these weird people called computational logicians who worry about it, and they're like, you were too cool to be a mathematician, but you're too much of a mathematician to be a computer scientist. So they had to put you somewhere that, as a computational logician. So anyway, we have these strange people who do these things. And then when you write a formal specification, then what you have is an ambiguity-free, sometimes machine understandable in our case is not, way of expressing protocols. Okay, but then you have a path to get to code, and that path to get to code has a much lower chance of a hack or a security problem or a semantical issue or whatever. Okay, so that alone is a huge step. And there's many pioneers there. Lamport wrote TLA plus. There's languages like Coq and Agda and Isabel, but those don't make a product. All they do is just give you some certainty that the product that you're building has merit. You see this a lot in large companies like Microsoft and Amazon and Google in particular. They model almost all of their systems using languages like TLA because they have these gigantic emergent systems with millions of computers and hundreds of millions of lines of code and billions of users. Failures, if you every time you add a little bit more complexity, you increase your rate of failure. You're going to have failure every day with those kinds of numbers and scale. So you need to have better tools to help you mitigate that. So we took that area first, and then we said, okay, well, what are we going to implement Cardano in? And we said, well, the engineers who are doing the formal methods work, they're probably going to live in the functional programming world more than the object-oriented world, because that world is they're very interconnected with each other. So why should we go hire a completely separate set of engineers? Let's go hire one set that knows how to do both sides, and we'll have a beautiful flow from science to code. That was the hypothesis. And it worked out somewhat well. The problem was that Haskell as a language was just not ready for something like Cardano and all of its needs. And along the way, we had to actually make Haskell as a language better. We also had to write a lot of custom libraries and code, and we had to do foundational work, GHC work, GHC.js, GHC, the WebAssembly. It was unbelievable, the effort that we put in to do these things. The other thing is that approach is very waterfall-like. So by the time you get from the paper to the code, it can be quite some time. So this is one of the reasons why we had so many slowdowns. There were many, but this is one of the pillars that holds up all those delays that we've historically experienced. So we had to learn how to be an agile, formal methods, science, functional programming company. There's none of them in the world, but we had to learn how to do that in the last 5 years, and it was horrible. But we kind of did, and we launched Shelley, and we're now actually moving with predictable speed and so forth. And a lot of the rough edges of Haskell have been removed, at least for our needs. And we're even funding the Haskell Foundation to kind of direct the evolution of that language so that it can continue to serve the needs of our protocols adequately. So in hindsight, could we have done it differently? Could we have chosen a different approach? Who knows? Now, the benefits are conciseness. We have significantly less code in production than, let's say, Bitcoin's core client or Ethereum's core client. In many cases, when you go from object-oriented to functional, you have a 5 to 10x reduction in lines of code. Why does that matter? Less code, less to maintain, less to read. And when you write code, you generally write it once for every 5 or 10 times it's read. So if you have 100,000 lines of code, you really actually are reading 500,000 or 1 million lines of code. If you have 10,000 lines of code, you're reading 50 to 100, right? So it's just an order of magnitude there. And then maintenance is a lot easier because you get a lot more tools like Quick Check and other things. Property-based testing is phenomenal for testing correctness of distributed systems. So there were huge advantages, and those advantages allowed us to do things like just recently when we launched Shelley, it was very slow when you went from the Byron to Shelley crossover. A lot of people noticed that. And because we hadn't had time to optimize the code. Normally, if you're optimizing a big distributed system of C++ or Java code, you'd be spending months meticulously doing that. In 2 weeks, we had a node update, and it was 100 times faster because we were able to so easily do performance profiling with the functional code. And, everything is so modular, and you can look at function by function, and, there's no side effects to complex your benchmarks and so forth. So there are massive advantages on maintenance, being able to move around, and certain things I don't know how to do them in other languages. Like the hard fork combinator was a super involved, complex piece of engineering. And we had some people try to implement something like it before, and they couldn't actually do it. So then Edsko did it, and he did it with Haskell. And he said, I just don't know how to do it any other way than this approach. So it's a mixed bag. There are cultural issues too. when you hire these brilliant science engineers, they can read papers better than any engineer can. But they don't really like working with agile or these other processes or these things. And they say, yes, when is it done? They say it's done when it's done. It might take 5 years, but like, whoa, this is a business here. We gotta we gotta figure this out. Come on, let's work together. So you kind of have to deal with that and so forth. But overall, I think we've resolved the problems, and actually this has been our best engineering year, and we're only speeding up. So Haskell today, great. Haskell 5 years ago, I did not know that I was just about to go lay in a bed full of razor blades and heroin needles. It was an experience, $10 experiences.
No, I'm regardless of what the number of years it took. I think you guys have done something. I think you've achieved something monumental. I mean, I kind of think back to the day when you guys raised $60 million, when other projects have had the war chests of billions of whatnot, if multiple hundreds of millions, and you have managed to deliver. So if you think about the return on investment, or return on every dollar that you have raised, I think this creating something that's so fundamental is just the governments probably would have wasted millions, multiple hundred millions of dollars in creating something that you guys achieved in 5 years, because you were probably also driven by the commercial side of things, and IOG pushed it. So I'm glad it's here.
A lot of people. The community helped enormous amount. Like, for example, you guys with the incentivized testnet, that is what made it so easy to launch Shelley. Because we had this incredible group of people that were ready to take over, ready to go, and they were always giving us good advice and feedback. And that means that no matter what happens, the staking experience is going to get where it needs to go. It might take 6 months, it might take 9 months, but it's going to get where it needs to go. The parameters will get where they need to go. The experience will get where it needs to go. We're already talking with Vacuum Labs about segregation of credentials and cryptographic assets. So you have like a cold experience and a hot experience. And you can do things like cold pledging and cold delegation and all these other things. Well, what does this mean? It means that your Amazon EC2, if that ever gets compromised, you can just build another one, but you haven't lost your money, your pledge money, or these other things. So it's just little things to make the life easier for the stake pool operator. Well, that came out of discussions directly with the operators. And that's the other lesson that has to be learned, is that these things are only as good as the customers who use them. And the fact that we have some of the best people around who are in our ecosystem, it actually forces us to rise to the occasion and be better. Voltaire is another phenomenal example of that. We have over 1,000 people that registered already with IdeaScale, and hundreds of ideas are going to flow through that first generation. And then people say, hey, wait a minute here, the fund is giving away real money. We should participate too. So you create this beautiful feedback loop where more and more people join. And then the next fund, maybe there'll be 5,000 or 10,000, and it'll keep scaling. And then the conversations will get better. The tools will get better. The ways to participate will get better. And we'll wake up in 6 to 9 months and it'll be just such a more refined experience. So yeah, foundations matter, like good science and good engineering, but experiences matter as well, and customers matter. And as long as you have that good relationship and the feedback loop makes you better each cycle, it's pretty inevitable that you'll end up becoming the market standard. Because when everybody else tries to compete with you, it's like everything you have is so much more refined, and your customers are so much more loyal, that even if they have a huge first mover advantage or more money, you can't buy that. Google is a great example of that, competing with Microsoft. Microsoft said, we'll just build Bing, and that'll replace Google search engine. We'll just throw $15 billion at it and buy all these companies. And then they even tried to buy Yahoo for $40 billion. It's crazy. And then look at the search volume for Google versus Bing. And Bing is a great product. There's a lot of magic there, but people are very loyal to Google in that respect.
I know that. Yeah, I noticed that the perceptions matter when it comes to market. I mean, you can see it in the behavior of people with pools, in our ecosystem, right?
Yeah.
If you think about it, right, from a risk return perspective, the returns on each pool aren't that different. Maybe there is a percentage, a fraction of a percentage different here and there, but the the difference between a most expensive pool and a least expensive pool is never more than probably 50 basis points or whatnot,
Right.
less than 50 basis points. But again, you see that the pools that are successful are the ones that have built awareness and built something that that is built on reputation rather than anything else. So people gravitate towards those kind of like sort of pools in that respect. I mean, I'm not saying Google is not doing their job; they're doing a great job there. But I'm saying that probably Microsoft, despite the fact that they are technologically very savvy, they're really capable, they just haven't had traction with customer, the way that Apple did, for instance, right?
Well, but here's the interesting counterexample to that point. Microsoft is just kicking Apple in the teeth with the growth of the Surface line. So
They've
they're building,
changed. Yeah.
yeah, they've definitely changed. And so, it is possible to chip away at first mover advantage. We've seen it in the tech industry over and over and over again. It's like, where's AOL and Yahoo? How are they doing today? So just because you have a monopoly today doesn't necessarily mean you'll keep it. MySpace is another example of that. There's dozens of them. The key is, are you, when you're chipping away at that, just saying, I'm the same thing, but come to me? Or are you saying, I'm doing something new and unique that no one else has done before, and I'm giving you experiences that you've never had before? So for example, when the iPhone came out, I mean, think about platform advantage there. They had no developers, zero. And Microsoft had all of them and 3 billion customers. So Microsoft's like, don't even think iPhone's a threat, because Windows Phone will eventually be Windows, and developers will stay in our ecosystem because that's where all the people are. And then 10 years later, it's like app developers never develop Windows first anymore. They develop iPhone first, usually because it's the highest value market, followed by Android. And then if they have time, they'll put it on Mac OS and onto Windows. So it's like, how did they do that? It's because the iPhone offered a new experience that you couldn't do before. And this is why I look and say, well, where are we going to get the first mover or platform advantage for Cardano? Where am I selling them? Am I going to California and Silicon Valley or to New York? And no, because it's a false hope that you're going to get large scale platform adoption in these jurisdictions. If you're selling financial products in New York City, it's super regulated. So the people who are, yeah, exactly. The people who are going to win that game by default are Goldman Sachs and Chase and these other guys who already have all the licenses. The only place we've even been able to move the needle is a state where we changed the laws, Wyoming, to move that needle. So maybe we can build a market there, and we're certainly trying. Kraken just got a bank license, so okay. But you look at that market, it's like saying you're going to have a race, and I'm going to put concrete blocks on your legs, and the other guy is 20 years younger than you and doesn't have any concrete blocks. It's like, are you going to win that race? Well, maybe. Maybe if you're like the world's fastest runner, you might just win, but the odds are you're not. So we go to Africa, to Southeast Asia, we go to Eastern Europe, we go to South America. These markets collectively have tens of trillions of dollars of value. Okay, it's there, and there's billions of people. People are valuable, and they have no brand preferences, and regulation has yet to set. So you say, would you like to use the old legacy system, and rich white people in New York are going to be the primary beneficiaries and they get 9 cents for every 1 penny you get? Or would you like to use a system you own yourself and you keep all the value? And they're like, yeah, I think this new system has some merit. Let's go with that. So you get billions of customers this way. So it's not like you're convincing someone who has brand preferences or regulatory restrictions to move from one system to the other. You're taking a person who has to upgrade because they're going from an analog to a digital world, and to globalize, they need to enter some system, and you're giving them an option to enter that system. And those people collectively have just as much wealth as the developed world. It's just illiquid and inaccessible at the moment. I think our prospects are phenomenal, because what is my competition offering them? Centralization, hyper-regulation, foreign control, much higher fees, worse services and product, things that don't natively work, and also basically every time something goes wrong, they have no recourse.
Charles, can you tell us about why people or governments or companies need to change and switch to open blockchain rather than creating something on their own sort of closed systems? And what are you offering technologically, economically, and politically for them?
Well, it's mostly about globalization. So if you live in a silo, there's no reason to leave the silo. But if you want to trade with people, then you have this problem of who's in control. So let's say you have Italy and Ethiopia, and they want to enter in some sort of trade agreement. And Ethiopia will sell coffee, and Italy will sell wine. Okay. Well, then how do you regulate that? Well, it's a bilateral agreement. Well, and then what happens when you add like 6 more partners? You have 8 now countries that are negotiating. Who's in charge? What about when you have 30 countries? What happens when you add a bunch of companies in too? And what happens when those companies start violating some standard and the host country says, like, for example, China with intellectual property, no, there's no violation. We're not going to hold anything against those companies. And then the other partners are saying, no, they're stealing intellectual property. Like when Microsoft went to China in the early 2000s and they shared the source code of Windows XP, China said, yeah, we're not going to buy that. And then suddenly all the computers in the government started looking a lot like Windows XP, but it was reskinned. And then Microsoft's like, wait a minute, what just happened here? So who holds these people accountable? So when you're a sovereign country, especially smaller to mid-sized countries that don't have giant militaries and nuclear weapons, it's really hard to be treated fairly when you're dealing with other counterparties. So generally, we form these big transnational organizations like the World Bank, World Trade Organization, the IMF, dozens of other transnational regulators, with the hope that these things will somehow create some notion of fairness in our trade with each other. But then you say, well, hang on a second here. Those are majority controlled by the countries with big armies and nuclear weapons. They're not controlled by the small actors. So they run into the same problem where they're basically told how to do business. To an extent, sometimes you don't even have sovereignty, where you're just like, you're the head of a country and you want to do something, your people want to do something, they vote to do something, and then a transnational body will come to you and say, yeah, no. And you're like, but my people told me to do this. I have to do that. No, sorry. You will shut you off. You lose all your correspondent bank connections. You'll be blacklisted in the League of Nations. And in some cases, they have regime change, like Gaddafi in Libya after he wanted to go to a gold standard. Okay, what does that mean? So when you go to these governments, you say, hey, the whole point of blockchain is no one's in control. That's intrinsically appealing as long as they feel comfortable that there is some notion of regulation in the system, but it's regulated from within the system. It's a dodge. It's almost like that Chronos thing, like, do you keep time outside of the system or do you have time inside of the system? Well, regulation's the same way. You can either regulate from outside of the system or you can be regulating within the system. And they say, oh, if it's regulating within the system, it's fair because we all know the terms and conditions up front. We all know how change occurs up front. We all know who's in control up front. And then this means that they have a much easier time with lower friction of interfacing with the consequences of trade and globalization. Now, for their people, it's a huge windfall because taking care of people in a modern economy is super expensive. Just look at our social budget that we have in the United States or other places, trillions of dollars. And all these services the government has to provide, they have to give you a passport, driver's license, all this stuff. These are all loss leaders. They're not profitable endeavors for governments to participate in, especially when your people can't pay you for them. So you go to Ethiopia, so you have 107 million people, and those people want a modern standard of living. How are those people going to get birth certificates and IDs and get online and all this other infrastructure for a modern society if you can't charge enough in taxes or fees to be able for the government to provide these services? You come with a blockchain, you say, well, actually, there's a way to do this. And by the way, when they do it here, they're intrinsically globalized. So It's not just about issuing a document. You don't actually have to build facilities to make that document interoperable with your neighbors in Nigeria and Kenya and these other places. No, it's already there. And if they want to plug into it, it's on an open interface, and they can use this to do global business right off the bat, which means more direct foreign investment into your country, more trade, more money for your people. They rise up. And you can do this across every facility: voting, property rights, even the currency of the country itself, as we're starting to see with CBDCs. So it's a very attractive conversation when you have power asymmetries, when you go from large countries down to mid to small countries, because they're already feeling the pressure and the unfairness in the world order. And they would much rather have a system that gives them a little bit more say and predictability and control, and they're no longer being preyed upon by these larger countries. For larger countries, you don't talk to the government, you talk to the people who own the government, the big corporations. And you say, look, guys, if you want to make money, the best way you're going to make money is getting 3 billion new customers. The guys in Ethiopia aren't your customers right now because they can't talk to you and you can't safely do business with them because the systems are broken. I fixed these systems. You can now sell products and services to 107 million new people just for that one country. And you just keep going down and say, oh yeah, but those customers aren't very valuable. It's like, well, yeah, Chinese customers weren't very valuable in 1980. How valuable are they now as a marketplace? So, if you get in early, you can get market mover advantage there. And then suddenly, as they grow in wealth, you'll proportionally grow. And these are great growth markets for you to be in. And if your cost of entering the market is very low and you have predictable business, okay, yeah, we're on board with that. So that's how you get the big governments to change, because the people who subsidize the politicians who run those big governments, the big companies, they're always profit hungry. And if they say, by opening these marketplaces up, we can make more money, suddenly the politicians will think it's a good idea to open those markets up and do business and become interoperable and compatible with them. So I think there's a very organic, natural way of selling. You start with the developing world, and they absolutely need this because they want fairness. They don't want to be bullied. They want to be in control of their own lives, and they want to be able to provide modern lifestyles to their citizens, but they can't afford them in the legacy system. So there's a better way of doing things. And then if you do that, they get wealthier, and then collectively the Fortune 500 companies want to do business with them because that's a new market, just like all these companies wanted to enter China, for example. And then they're going to go to their governments and say, we need to change our regulations to allow us to do business with these people because those people are wealthy and we don't want to lose customers. And the governments will, of course, say yes, because if they say no, the next wave of politicians that replace them will say yes.
We'll say yes. Yeah, that absolutely. I mean, that kind of triggered a thought in my mind. Like I remember you traveling a lot, and I used to work for the IFC, which is part of the World Bank, and I definitely see a lot of parallels there in your thought process and what happened in my head when I finance these projects. I used to finance infrastructure projects. There are some economic realities as infrastructure sort of investors, right? That you look at the last mile cost, and if the mile cost is too expensive for a population of 500, for instance, you wouldn't go there. I think the problem with financial infrastructure is kind of the same. It's just that it spans countries. It's easier to go to France because France has wealthy population and it has the infrastructure and the educated people who actually make the system work. And if I had to pin down the major value proposition of an open blockchain from my side, the way I see it as a financial professional is actually a system of record keeping is the building block of anything you can think of, right? In the modern society. It's just that we had the brain power and the time and the dedication to build them the way that we built them. But a country that has none of this can adopt it in a jiffy, in a very inexpensive way. They could have a system of records. The way I see it is that you could actually have the companies operate on a blockchain. They don't have to be completely transparent. You could have a key that allows, let's say, the tax collecting sort of authority just to see the books of the companies and charge them with taxes and whatnot that they owe. But the selling point here is that you will have those records. You know how many times I would meet with all these people in EBRD, right? The mayors of cities and whatnot, the governors, and their biggest headache was, how to collect taxes, because whatever, you're giving a bunch of paper that just kind of like exists there. And I'm not gonna sugarcoat this. In these countries, there are two sets of books, and white books and the black books. And the black book is the one that actually matters because that's where the actual profits are, and then the white book is for the government to tell them that you don't have money. So and then the tax rates are really high there because they kind of say, okay, we'll take that into consideration because they have black books, so I'm gonna just say 17% on this white, whatever you give me in the white books. But if you have a blockchain, right, when everything is on the blockchain, and you tell me if that's possible or not, but if you have everything on the blockchain and the government, just like we do in Cardano, basically sets a tax rate voted by their population or by the Senate or whoever, then you don't even have to sustain and keep the army of people who go down the businessman's door and then try to shake them for, a couple of rubles and whatnot, right? So that's one of the things. It's like a win-win situation there. And the second thing is that, people would be more willing to not people, but the government would be more willing to actually adopt these kind of technologies, because it increases their taxable base, and also it will be more fair because you wouldn't be killing a business thinking that, oh, this guy needs to pay me more because I think he has money, but in reality, he may not have that money. So in addition to that, you probably would be, in addition to solving those kind of problems, think about killing a cow that gives you a milk, right, every day. You can say, well, I think I could be better off today, but then you wouldn't have milk for the rest of your life. But yeah, I mean, do you, when you meet with the heads of governments, is my question, what do you discuss? What are the lowest hanging points?
It depends on the country. And, I know a lot of heads of state now. It's one of them even gave me a giraffe. It's a pretty crazy world. Mongolia was probably the most fun because when I talked about taxes, I said, do you have a problem with tax compliance? They say, oh, it's terrible here because a third of our population are nomads, and you try to tax them, they disappear into the desert. I'm like, yeah, it's tough. So, here's the first axiom, and people don't get this. No matter how high the tax rate is, in poor countries, rich people tend not to pay taxes. They have the luxury of being global citizens and disappearing in ways, or structuring themselves in ways where they can always minimize their tax burden. So that class is very robber barony in these places we go, whether it be Indonesia or the Philippines or other places, and sometimes sickeningly so. And these governments, they're always trying to deal with these realities. And they say, we'd love to be able to charge a fair tax. And some governments actually had breakthroughs, like the government of Georgia, for example, in Eastern Europe. They have a very simple tax system. They have flat tax, and they got rid of an enormous amount of corruption over a 10-year period. But it was hard. It was very, very hard. And like people ended up dead in rivers and these things. They had to fire every police officer in the city of Tbilisi and train a completely parallel police force. There was a lot of things that they had to do to get there. And there's still a long road to go because, it is what it is. So we do have conversations about record keeping. We do have conversations about automation of taxes and fees and regulatory compliance and so forth. And what's nice about a lot of small and medium-sized countries is you can have real conversations. I've never had a real conversation with the IRS or the SEC or the FinCEN or these other things. I've had an official conversation followed by cocktail drinks and kind of like, well, maybe. You can never get a real conversation out of the United States. But you go to Georgia, it's like literally you can talk to the head of state and have dinner with them and say, okay, what's really going on? They said, oh, this is the problem. I said, okay. And you ask, what are your pain points? And sometimes they're in super simple pain points to understand, but super hard pain points to resolve. Like in Ethiopia, I remember having dinner with Khalid Bamba, who's the CEO of the Agricultural Transformation Agency, and they're in charge of 15 million smallholder farmers in the country. So it's a huge task, and their job is to figure out how do we get them collectively doing the right things so we don't ever have starvation again, and we can actually grow wealth and modernize our agricultural processes. And so he's got the hardest job in the country. Anyway, talking to him, I said, well, what's your problems right now? He said, well, Charles, my biggest problem today is that when fertilizer comes from Djibouti to Addis, it arrives in Djibouti at 50 pounds. And I guess it goes on a diet because when it gets to Addis, it's 35 pounds, the bags. It's like, okay, yeah, I see what you're saying. And I said, well, let's look at your supply chain. And, we start unwinding that. And there's probably 600 different unique entities that are touching those bags before they arrive in Addis Ababa. So that's the problem they want to solve. Because, it's great to talk about big geopolitics and the rise of great nations and philosophy and Bastiat and Ludwig von Mises and these things. You can go all the way down the road, right? But at the end of the day, if you can't solve the problem of disappearing shit, you are shit. So that's how this works. So those are how you build these relationships with these policymakers. But if you're really clever in your solutions architecture, along the way, you can say, well, we can put digital identity here that also could be used for census and voting. We can put a payment system in here. We can put a tax compliance system in here. We can do all kinds of track and trace things here that are very useful for solving a collection of problems. You solve the primary problem, but in the process of solving that problem, you solve a web of secondary problems. And then they say, wow, okay, this has legs. What else can we do? And then suddenly you have 12 other ministers calling you saying, like, I heard from the ATA that you solved this thing. Can you do the same thing for us? You say, sure. And over time, you kind of blockchain the entire country. I think Georgia is probably going to be the first country to be fully blockchained in the next 5 to 10
I have no doubt about that. I've worked there. I've visited them a lot, and I've from all the former Soviet Union republics, I think Georgia is my favorite, and they've got good food and good
Yeah, I was
wine
going to
and
say,
whatnot.
you gain about 5 pounds or 10 pounds when you visit there because they give you so much meat and wine. It's unbelievable.
I know it's a fascinating country, and it's amazing that they have, Stalin was from there, right?
Yeah, yeah, yeah.
That it's just completely opposite of what what Stalin was all about. But anyway, it's it's a great sort of time to be alive and see this blockchain space develop, because I think it has in its infancy even started a tectonic shift around money, around value, around the supply chains, around how we save, how we spend, how we invest. And I think there's a lot of good things still in store for us as we try to discover what we can build on it. Just like the early days of internet, we are just trying to get a sense of like what we can
Right.
do with this, but it's as I say, always sky's the limit, right?
There's an escape velocity. So the internet, you kind of had to get dial-up where it needed to go. Then you had to get the web browser, and then you had to have JavaScript, and then suddenly you had to get broadband. But once you had these foundational things in place, then suddenly the Amazons, the Googles, and the Facebooks, and the YouTubes just emerge. Then they've always been there. They're always great ideas, but they required a certain baseline of infrastructure. And cryptocurrencies are exactly the same. I mean, Bitcoin in its current form, hopefully it'll evolve, but in its current form, just can't do the job. And Ethereum just can't do the job. And we tried to build Cardano to kind of be that last needed generation for the revolution, so that it's good enough infrastructure to really take us to this next level. And we can see the Googles and the Amazons and the Microsofts, just decentralized versions of them, kind of emerging from this foundation. And you have to build it, as I mentioned, with great partners. And if you're claiming you can solve big problems, go talk to countries that have big problems and go solve those big problems with those countries and show the world that you've actually done it. Now, it might take me 10 years or 20 years to get enough momentum for it, but these people aren't going anywhere. And I'm not going to lose them to Ethereum or EOS or these other platforms, because they have no appetite or desire to even play in these jurisdictions. And when they do, they generally do through community groups, and they're offering them nothing. And they're offering them no public-private partnership, nothing there. It's so I can come in and just basically spend years working my way through it. We achieve this, we wake up, we have 1 billion users. So, it's we're doing what we need to do on the science and engineering, and the community is certainly doing what they need to do. And it's been a privilege just seeing the progress we've made. We've gone from, we just showed up in a country, nobody knows us, to we're talking with heads of state and running programs with different ministries and signing MOUs and bidding on pilots as they come through. And that's where we're at today. Within a few years, we'll be basically the back end for the whole social fabric of a country. And once we do one, it'll go to N, and we'll be 20 countries and 30 countries. And tell me the barrier to exit there. After we've assembled all the things, you think Ethereum is going to come in and displace that? No, it's there forever, and people love it because they understand it, and they also understand it's been built with the right principles. Because here's the difference: our system has governance built in. The competitors generally don't. So when they ask, how does this evolve? Who's going to pay for the evolution of the system? How is it going to change? There's no story other than people over the internet will just come together and figure it out. What we're doing with Voltaire is figuring it out right here, today, right now. So it means that when you adopt this infrastructure 5 years or 10 years from now, it's like becoming a citizen where there's a strong rule of law and a good constitution. You have rights. And even if there's a bad leader, they can't take those rights from you. There's checks and balances in that type of a system. That's, I think, the single most appealing part of the sales pitch.
Thank you so much for coming here. I really appreciate your time, Charles. And hopefully we'll have you next time when Gauguin comes.
Oh yeah.
Yeah.
I'll see you soon. Cheers.
Thank you. So this concludes our program today. Thank you so much for watching and listening to the first episode of Slot Leader. If you liked the content, please subscribe to our channel, as we will have more interesting content for you coming down the road. If you have any questions or comments, you can leave them in the sections below. I'll see you next time.